Good morning, everyone, and welcome to Equinox's August Focus event, Insuring Your Business Lessons Learned from the Crisis. We're really excited to have you. This topic continues to come up from clients for so many different impacts that they've seen through this COVID experience. And Marie and I were talking about how do we help folks to think about planning for the future. We know other disasters will show up, maybe another pandemic, maybe something completely different, but what can we do as business owners to plan ahead and either prevent or mitigate some of these impacts for the future? So we're really excited to have Marie Gallanar of Parker, and Feek. Many of you probably know them. They're a premier insurance provider for property casualty, D&O benefits to businesses in the Puget Sound region. So we're really excited to have Marie. She and I have known each other for many, many years. And she was my first thought when I came up with this topic for today. So if you have questions during the program, please feel free to use the chat. We may not be able to tackle them all during the program today, but we will try to answer any questions we don't tackle today in the follow-up email, which will include the link to this program recording as well as the slides. So, and we will be using chat for some interaction as well during the program. So welcome, Marie.
Good morning, everyone. Thanks for having me.
So we're going to start with our typical disclaimers. From the legal standpoint, the presentation is not legal advice. There's so many nuances to these different decisions. It's important to talk to counsel about your specific situation before taking action or refraining from any action. Marie?
Mine is the same, just with insurance inserted in there, and everybody's insurance program is different. Obviously, the information we're providing today is based on current market information and case law that's available today. That case law is changing every day as cases are decided. So we'll go with what we have today.
Great. So starting out, every business in the region has been impacted by COVID. So in the chat, could you please just type out quickly the kinds of things that you found to be the most impactful to your business over the last 4 or 5 months? Love to see some thoughts.
This will also be really helpful in guiding our conversation today as we talk about the different ways that your businesses have been impacted. So thank you, John, for being the first to put your note there in the chat about working remotely. It's definitely a challenge.
New management challenges that go along with that. Because for some people, it was easy to actually move people out of the office, but managing it is a whole different ballgame.
Yeah, Rebecca's talking about not being able to meet with clients and having online classes only. Definitely a challenge, even as we step into, this kind of new phase of being able to get in front of people. It's still tricky, a lot of at their facilities. So even if you could, they're still not allowing it at this time for safety. Yes, no childcare for me or employees. That is a big one right now. We are all still trying to figure that out. From an insurance standpoint, we continue to get that question a lot because people are trying to figure out, can they provide childcare on site and what does that look like? And we're trying to figure that out for clients.
And I think just this constant change, keeping up with the moving parts. If you're in multiple jurisdictions, you've got to know what the state's requiring, the county's requiring, the city's requiring, and it's changing all the time. So that's a huge one as well. And of course, no physical locations. So, David, the ability to go into a facility to do your work, when you can't do that, it really, impacts the ability to sell. So, well, great ideas. Thanks for sharing those. I'm going to add to that the list that we came up with. It's pretty common, and some of yours play into this as well. So the significant COVID impacts: employees unable to come to work. In some cases, they couldn't work because they couldn't go to their facilities. In some cases, it was remote. Customers unable to buy. So if you have a physical location where people come in to purchase your goods, or as David mentioned, ability to go to their site and sell your goods, that's a huge impact. Supply chain disruptions, employee illness. We mentioned workforce and the childcare issue, which is related to that. And one of the unique things about COVID is that this is a worldwide issue. And so it's a trickle down, especially with respect to supply chain issues, that is unusual for a disaster. We often see them as being more regional. So is COVID different? I mean, I think we feel like COVID's different. This is something that we've never experienced before. I mean, we kind of have a sense for what does an earthquake look like? What does a hurricane look like? But this feels different, but is it? And as we were thinking about the different kinds of disasters, earthquakes, floods, riots are another more recent one. Marie's mentioned, active shooter, terrorist attacks, ransomware. We don't always categorize these as disasters in the same way that we think about COVID or natural disasters, but they all have impacts to our business. And those impacts are actually quite consistent. The types of things that are happening under our COVID experience are similar to what we would see in either natural disasters or other disasters, as I mentioned, things like terrorist attacks. So again, employees unable to come to work, customers unable to buy from you, loss or damage to property, supply chain, employee injury or illness, and then one that didn't happen for COVID, one of the few, telecom and power outages. That is something that we've been fortunate to have in this case, but in many, many of these situations, you don't have that, and that's something that needs to be planned for. So Marie, I'm gonna let you take this to start out talking about the different tools that are available to us as we begin to look at these impacts and figure out how do we tackle the solutions.
Absolutely. And when we're looking at doing our disaster recovery plans, as we look at our business continuity plans, the first thing that you want to take into consideration is what risk mitigation tools do you currently have in place. So anything from looking at even just seismic bracing, sprinkler systems, things that you've done to your property to minimize the impact of a disaster on your actual building. And then, other things that you would do from a risk mitigation standpoint, creating your continuity plan, creating a call tree, so that if a disaster occurs, who are you going to call? Which members of leadership are going to be involved in those meetings and getting together to figure out how you're going to address whatever that disaster is that's happening at that moment. Once you've put those risk mitigation tools into place, then you look at, okay, where are our gaps and where do we need to fill in potentially with insurance, and what insurance policies might be available to us and at what cost, and weighing out that cost versus benefit of, okay, risk mitigation, we're going to do everything we can, and then we're going to look at insurance. The other option with risk mitigation is we look at risk transfer. And that's really what Michelle's going to hone in on, is contractual risk transfer as part of your business continuity plan. So I'm going to hand it back over to Michelle.
We're going to get more into insurance first, though.
Oh, let's talk more about insurance. So I just want to make sure that we kind of level set and talk about the role of insurance. And I think this has been an important part of the conversation during the COVID crisis, is to understand when does insurance make sense and what policies are available to business owners. So the function of insurance is really to safeguard against financial losses by having the losses of a few paid by the contributions of many that are exposed to the same risk. So the biggest challenge with COVID has been that particular risk was, for the most part, excluded on most policies, because carriers, after the SARS outbreak, excluded it on policies, specifically because really there's no way in the event of a pandemic to provide insurance to everyone that would be affected. infected is a funny slip of the tongue there, but by everyone that would be affected by a pandemic, because by its very nature, it's a worldwide event, and insurers would just become insolvent. And so there really wasn't an intention to provide that coverage. And we'll talk a little bit more about, just in a moment, what was actually anticipated in insurance policies for the most part. So in order for this model to work and be affordable, that's a big part of it, is you really do need to put into place those risk mitigation tactics that I talked about earlier, but you also have to put in some risk transfer. That's what Michelle's going to talk about with contracts. The risk mitigation, that's everything from quality control, sprinkler systems, seismic bracing, policies and procedures that you put into place in the event of a disaster, employee handbooks. So just think about all of these risk mitigation tools that you're putting into place every single day as being part of your business continuity plan, being part of your disaster recovery plan. And so these strategies really do need to be the first line of defense. And as you look at your plan and you see some holes that you're not comfortable with, those things that keep you up at night, that's when you can really look at insurance as a way to potentially fill those gaps. But you really have to have that risk mitigation conversation with your broker to understand what the gap to be, and is there insurance available for that? Because it's not always the case.
Yeah, and folks question a lot why the insurance company wants to see their handbook or their COVID policy or their safety policy, and that's a part of it, right? The insurance carriers need confirmation and confidence that you've done some of this risk mitigation in order to feel that they've properly assessed their own risk.
Absolutely. They want to know that you're a good partner in that risk mitigation relationship. It is a contractual relationship between two parties, and they're going to use all of their actuarial data to determine, what their exposure is. But then they need you to help tell the story of why you are a good risk. Especially in this current market, we are in a very, very difficult insurance market right now. We were already in a difficult market 12 to 18 months ago, and it's just continued to get worse and then exacerbated by COVID. And so you want to make sure that, if you're going to try to minimize your premium increase, you want to be the best risk out there. And that's why these plans are so important. And being able to share them with your insurance carrier, it's not necessarily going to get you a discount, but it will make it so that you get coverage. That's what happens in a hard market. So we kind of put together a list of the types of insurance that you think of for a disaster. So not just necessarily something that affects just your business. There's a whole slew of other insurance that we think about when we just think about your own exposure. But these are the types of insurance that we think about for disasters. Obviously, the property and casualty is going to be the first one. You're going to look at, how is your building affected? How is your property affected? And within property and casualty, you'll also see things like your business income and your coverage of your equipment, and potentially also the coverage of your inventory and stock, depending on how your program is organized. And so those are the types of insurance that we think of first when we think of disasters. But the other types of insurance that not everyone has, and that's why I kind of bring up some of these things, because these are insurances that are triggered by disasters. And power outage is a pretty big one that is not necessarily covered in. And so those are some things that you might want to look at with your current program to understand how dependent are you on power. Do you have backup generators? If you have those risk mitigation tools in place, you might not worry about it that much. But if you are very, very dependent on power in your facility, or also, I'll throw telecom in there and throw internet in there as well. If you're very, very dependent on those things, then you want to make sure that those are things that you either have risk mitigation tools in place for, or you have insurance in place for. Obviously, earthquake and flood, a lot of people do not buy earthquake and flood coverage. And so with that, you also do not have business income coverage for earthquake and flood. And so we've been having a lot of conversations recently with clients who maybe weren't concerned about earthquake and flood in the past because they feel pretty good about all the risk mitigation tools that they've put in place from a property standpoint. But the things that they can't control that they've seen with COVID is that business income piece. And how is your business income being affected by whatever the disaster is that happened? Is it, Michelle talked about it earlier, is it you can't get to your customers? Is it your customers can't get to you? Things like that can happen during a natural disaster. So the other thing that a lot of people also realized is contingent business income. And so this is kind of tough, still probably would not have been covered during COVID, but contingent business income is if one of your major suppliers goes down. And so say one of your major suppliers is in China. We have this coverage for some of my clients where if that facility were to burn to the ground, they don't have another option for getting their product. That facility has all of their tooling and all of their molds or whatever it is. And so they don't have a backup plan. So you have one of two choices. Create a backup plan with, diversifying, how many facilities you use and where they're geographically located, or look at contingent business income to insure against that loss. But again, it wouldn't have been covered by things like force majeure because the government shut down people's ability to go to that particular facility. The insurance that we are seeing utilized quite a bit right now is trade credit, and that is insuring your accounts receivable if your clients are unable to pay or there's bankruptcy, things like that. That insurance is being heavily utilized right now as people are going through tough times and are unable to pay their bills, basically. Business income loss, I think we all have a sense of what this is, but basically the loss in revenue, if you still have bills to pay, you still have to want to pay your employees and you have bills to pay and obligations to pay. If you're not able to operate and you don't have any income coming in, but you still need to be able to pay those bills. And potentially something else that's not talked about a lot is the extra expense. So say you have a business income loss and you're able to be made whole by being able to pay your bills and pay your employees, but you still want to get product out. You still have obligations. Maybe you have a contract with Boeing and you have a timeline that you need to meet. You may need to go to another facility and say, hey, we need you guys to do the powder coating for us. We would normally do this in our in-house, but our equipment is not working because it was damaged. So that's where that that extra expense and when it comes to business income. We look at this, as it relates to disasters, as employees may be hurt while, during a disaster, after disaster. We're seeing this also being heavily utilized right now for COVID cases. So they are definitely being looked at with scrutiny by the insurance carriers because they're wanting to understand where did that person get COVID, but they're also making some assumptions if there's multiple cases in a facility and people are working in tight quarters. When it comes to L&I, for the most part, from what we've heard from clients, is that they are accepting most cases right now of COVID if it happened in the workplace without a lot of investigation or scrutiny. Don't quote me on that. It's just what I've heard on the street. So employment practices, again, for disasters, when we think about what type of disaster we're looking at, but we kind of listed out some of those there. When it comes to COVID, there's going to be, there is and has already occurred layoffs. And so depending on how those layoffs are structured, we are anticipating that we're going to see some claims from employees about wrongful termination, depending on who was let go and when and how those decisions were made and how they were articulated to the staff about how those decisions were made. Directors and officers, D&O, another type of insurance that we anticipate is going to be triggered as it relates to COVID, about how the directors and officers handled the pandemic and how financial forecasting was done and whether or not people feel that it was done appropriately. Obviously, for a lot of closely held businesses, not necessarily dealing with shareholders, but the other way that D&O is triggered is as a result of bankruptcy. And so we anticipate that there could be some D&O claims coming up here in the near future. So I kind of wove in there how these protected people during COVID. because even though we haven't seen any, at least when it relates to case law, business income wins for business owners yet. We've seen some denials of those claims that have been decided by case law, but we still are seeing some insurance step in and cover as a result of COVID. And so really just trying to understand, what insurance is, affecting, which part of your business. And so we have seen it, like I said, with trade credit, we've definitely seen claims paid there. We've seen workers' comp, and I think we're going to continue to see insurance step up as it relates to employment practices and D&O claims as they come up. Anything I missed there, Michelle?
No, I think you're right. It was Wall Street Journal had an article maybe 2 weeks ago about some of the claims employees are making against employers, and it was focused on some of these larger employers. And it's easy in hindsight to say, well, everyone was, the actions by Safeway or by Tyson or by whoever the claimants were absurd at the time. However, when you think back to where we were in February, where we were in March, the information we had, and all of you experienced the same thing. It was a changing rules by the minute. At the time, did they act appropriately with the information they had? And I think it'll come down to a lot of that analysis. Is in hindsight, yeah, it definitely seems like it may have been a mistake. But there are going to be facts and circumstances in each individual case that I think will really play into how those cases are decided. So
yeah, and I think a big thing to highlight about business continuity and disaster recovery planning is documentation. We did a webinar, 6 weeks ago talking about specifically about D&O, and the biggest thing that you can do for any exposure is document what you knew at the time, right? Having that date and time stamp to say, based on the information that we have today, these are the decisions that we're going to make, and have supporting evidence for why you made those decisions at that time. It's going to be super helpful in the event, that you do find yourself in litigation.
Yeah. And we've worked with a lot of clients around policy drafting and amendment, and how do we roll this out? Who does it apply to? And I think, going forward, the work from home policies will be the same. This idea that it was this, grab it and go home and figure it out initially. And now we've got a lot of clients who are talking about, well, people really want to stay home. What does that look like? And so again, whether it's a, COVID safety policy or work from home policy, all of these decisions that you're making should be strategic and documented. So great point. All right. So as Marie mentioned, insurance is kind of your second or maybe even third line of defense on risk mitigation and protection. So, thinking about other tools that are available to you, because it's your job to make sure the company is safe. And insurance is sort of a gap filler. So the first is, building business resilience. And what that means is focusing on building a company that is set up to prevent issues from occurring. So, we've all, heard about ransomware. There's a lot of cybersecurity issues that are being talked about right now. Is your business set up to avoid that from happening to you, as an example? A second tool is business continuity planning. And so business continuity is keeping the business going during an event. Whereas disaster recovery planning is about getting back up to normal operations following an event. So these are often used interchangeably, but they have a kind of slight difference in what they are tackling, because the problems that we tackle during the event are different than the event is over, now we need to get the business back to where it normally operates. I was thinking about this in light of kind of where we are today with COVID, and I think it's kind of hard to say where we are. It feels a bit like, and again, it depends a lot on what business you're in as well, that we're still in the middle of this because people are still working from home, customers are still not allowed to come to businesses. But I think for a lot of companies, there's this, we have established and settled into something that's working. What do we need in order to get us back to 100%? And that's sort of the disaster recovery component. So I think a lot of businesses are somewhere between these two right now. given where we are. So quick question. Did your business have a written business continuity or disaster recovery plan in place prior to the pandemic? And if so, how did it help you? So go ahead and put that in the chat.
The first person to enter their answer into the chat wins. Just kudos, gold stars. It's David. David wins. And David, don't feel bad. That's actually a pretty common answer.
Actually, 75% of small and mid-sized businesses don't have one. So for those of you who are kind of holding off on putting no in there because you're feeling a little embarrassed, it is more normal not to have one than to have one. However, we're hoping that this information will give you the tools to move it forward.
Yeah, and to John's point, didn't have one that applied to this situation. And I guess my follow-up question, for John would be, as we kind of talk about the similarities, were there components, of your plan that you were able to use? And maybe it was even just something to the effect of, if an event happens, leadership will meet daily for 30 minutes to discuss, topics of the day.
John, I'm gonna unmute you, I think.
All right, you did.
Okay.
And I would say, yeah, there were parts of the plan that were applicable. I think the biggest one, and Nancy may still be on the call, as we made the decision to go remote, I was getting on an airplane, and I basically said, okay, management team, figure this out and let me know when I get off the plane. And our normal disaster recovery or continuity plan is really, if I get hit by a bus, what do they do? So my getting on an airplane was kind of like being hit by a bus for a short time.
And that's a really good point, John. I was actually just talking to one of my clients yesterday, and we were having that if I get hit by a bus conversation, because I think, at least in our business, that part of the conversation, the key person conversation, the personal lines, what's my umbrella look like conversation, those have dramatically spiked because people are realizing that, in the event of a disaster, a situation, whatever it is, that you easily could be pulled out of the equation, and for an indefinite amount of time. And so would your team be able to handle it without you? And that's a good conversation to have.
Yeah, and I had succession planning as a potential topic for today, but we were just covering way too much. But key people is a really important part of the conversation.
And I think, in the event of, we keep using this example of an earthquake because a lot of my clients just dealt with it last year up in Anchorage because we have an office up there and a lot of my clients have locations up there. And they found out, pretty quickly, if all of your folks are dealing with trying to keep their families safe or checking on their own houses, is anybody committed to going and checking on the facility if it doesn't happen when it's during work hours? And so those are the kinds of details that end up in your disaster recovery plan, is understanding who's going to do what in the event of a disaster. And it looks like Nancy is on the call. Is there something you wanted to add, Nancy, to John's comments?
No, I just wanted to let him know I was here.
John, she's still here. She's still part of the team.
All right.
Thanks, Nancy.
Great. Well, and I think that John's comment is actually, very much in line with the first couple of slides, right? It feels like, COVID is really different. So why is it different, right? What did we plan for? Did we plan for disasters? Or did we plan for, key person being out? Are we planning holistically? Or are we planning for just, specific components? So looking at this idea of building resiliency, kind of the first step of this is a risk assessment. So really understanding what are the dependencies of your business. And here's sort of a initial laundry list. As you look through these, I'm sure there are a couple of them you would go, oh yeah, that's a problem. But as you go through your own business, there will be others that come forward that are not listed here that you would say, yeah, if we didn't have that, it would be a real problem. And that's what we want to uncover in the risk assessment. It's going through what are the things that our business cannot operate without. So customer concentration, if you're one customer, two customers are in a geographic location where there's an incident, How does that affect you if one of them goes out of business? How does that affect you? Same with vendor and suppliers. Geographical diversity, we see that a lot with respect to IT because so much of our data and operations are done through cloud computing or on remote servers. So making sure that there's redundancy there. Availability of raw goods, key individuals Marie was just talking about, and John was talking about. Dependency on physical locations. This has been kind of the restaurant and retail world over the last 4 or 5 months. We required people to come in to buy our stuff. Technology, what dependencies do we have on certain kinds of technology, whether that's a physical server, internet access, what do we need in order to operate? Cash flow needs. This one hasn't been talked about a lot, but I actually think it's one of the more important components is, operating lean versus having that, expected 3 to 6 months of savings in the bank. Not all businesses can do that, but do you have a line of credit? Do you have the tools and have the ability to access those tools when you need them? Contract terms. So Marie talked about, risk transfer with contracts. So if a disaster occurs, what are our obligations under a contract? What are the other parties' obligations under a contract? Who's liable? Do we have the right to terminate? So really understanding if we had to stop operations because we couldn't perform, what tools do we have or what flexibility do we have under our contracts in order to mitigate our damage and mitigate our customers' damage or whoever the other party is? And then the force majeure language is becoming a huge thing. We see that all the time. Can we beef this up now? Everyone's paying attention to that boilerplate stuff that we never read. This is a great example of not all of them are created the same. They all have very different terms. And because it's rare that it's an issue, we don't really pay a lot of attention. So looking at those kinds of terms in your contracts and making sure that for the impacts to your specific business, that those terms are appropriate and protect you as they need to protect you. And then critical equipment. So if you have one piece of equipment that gets, smashed and can't operate, is that going to be something that, debilitates your operations? So understanding the dependencies is sort of that first step. And then what is the impact of that being unavailable to you? We're looking at the likelihood of it happening, the dollar impact, the legal impact, operational impact, regulatory impact. So if one of these things is no longer available to your business, what happens? Which then leads us to our planning tools. So once we understand what dependencies we have and what could cripple our business, then we can start to say, okay, what does it take to make sure the business can operate to the extent possible during an event? So let's look at, March. March is a great example of, oh my goodness, no one can leave their house, no one can go to work. What do we do? So once you take a look at those impacts, you can plan alternate systems and processes for your business. For example, we talked a bit about the office. How easy is it to move your workforce remote? For some people, that was pretty easy. For others, the people could work from home, but they didn't have the capabilities in place. And for some, they couldn't do anything without people being in the office. Very, very different impacts for those businesses. And so their alternate systems and processes are going to be different. We talked about physical customers, same idea. Look at what restaurants have done, right? It's all carry out, delivery. There are certain businesses that have really made a killing on, delivery of food and products. People moving their business to Amazon because now they have to sell online because they can't sell in person. So if you have a physical location dependency, if you have a physical customer dependency, what systems and processes do you need as a backup in order to keep the business going? And in some cases, the answer is we can't, right? Certainly not to the extent we need to run our business or to make it profitable to keep people employed. But these are all parts of the analysis that need to be done. Supplies. So if you are a physician's office, masks and gloves and sanitation is part of your day-to-day, and all of a sudden it's not available because it's being, purchased by everybody across the country, around the world, and it's just not available. Does that mean that we need to think about having a higher level of inventory that we keep? What does that mean as far as what we can do? Because in that particular case, you probably can't say, oh, well, we'll just find a different vendor, because we had distilleries making sanitizer, which is a great pivot for them, right? So thinking again about what those dependencies are and what systems and processes you need to have in place to quickly be able to adjust. And this is where the communication plan that Marie mentioned earlier is important. A lot of, I think, companies that had strong and regular communications in the first couple of months could bring people down from that fear. And so the communication plan to me has a couple of different components. One is just the confidence that it provides the entire team, that something that we know what's happening. We know that there is action, we know that there is leadership, and that right there is going to ground your people. The second, though, is what Maria talked about with who's going to do what. Whose job is it to make sure the facility is being checked on? Whose job is it to make sure that we've got a log for who's coming into the office on any given day? And so people know what to do. They can take, timely, structured, appropriate action in the midst of what feels like chaos to most people, having that plan and being able to execute on it. So the communication plan is just as important as the actual to-do tasks behind it. And
Michelle,
then,
real quick, can I just dovetail on the communication plan? Because this is something that we went into detail. We hosted a safety summit last year, and it was basically about disaster recovery. We went through different types of disaster. And the biggest takeaway about the communication plan was it's really important to get all the stakeholders together to get agreement on who's going to do what and how that information is going to be tracked in the event of a disaster. There was a lot of conversation around who owns that, and we happen to have, our safety managers, directors of safety. Those were the folks on our panel, but their big thing was it really does need to be the most senior leadership needs to own that communication plan in the event of a disaster. The risk management team can help put it together, they can help do the tracking, but the communication really does need to come from the top, and it does need to be part of the culture in how you respond in the event of a disaster.
yeah, that's great. The next item, though, is test it. And I know that for most small businesses, the work of putting this together is a lot of work. The idea of having the team come together to kind of run through what this looks like, and best practices certainly on a disaster recovery plan is to actually turn the stuff off and run it. Most small and mid-sized businesses aren't going to do that. But you want to have the confidence that, again, everybody knows what their job is, everybody knows how to do that. And so that if this happens, it's not the first time anyone's seen it or thought about it. Everyone should really have a good sense of what it looks like and what it does. So test it to the extent that you can in order to give people the ability to react in the moment if they need to. And then I think the business continuity planning, this is really about the temporary time frame that you have to respond to an event. So how long can you sustain this, right? One issue is cash, of course. PPP helped a lot of folks to have more runway, given that businesses were closed, unable to operate. But in a given situation like an earthquake or one of the other disasters that we talked about, how long can the temporary plan keep you going? Because it's not going to be permanent. And so that transition from the business continuity plan to the disaster recovery plan is sometimes about a new model that has to go on for a long time. And again, I think that's where this COVID situation is a little bit muddy, because there's not okay, the event happened and we know that 2 weeks later we'll probably be able to have telecom back and be able to maybe access our facilities, but there's a clear cleanup period. In this case, there's so much uncertainty about when the temporary is going to be over and the permanent comes back, the normal comes back. So cash, supplies, remote working, telecom needs, all of that is in the how long can we operate on a temporary model, which is again a part of this plan. All right, so I mentioned disaster recovery is about getting business operations back to normal after an event. So normal assumes that it's what it was before, which I think may be something that COVID is teaching us as well, is that maybe we don't want what was before, but what we do want is the business to be able to operate in a way that is productive, efficient, profitable, all those things. So, use the term normal in the sense that's appropriate for your own business. What does normal mean? And what do we need to have as the new scenarios, the new systems, the new processes to move forward? Most of us will plan this around what it is today, but I think there needs to be some flexibility in that to react to a longer term temporary / permanent solution like what we see now. So don't be too focused on the getting everything back to the way it was, but rather that operations can move forward as the business requires them to in order to continue. So address dependencies and risks. This is very similar to what we talked about in the business continuity plan, but again, more of a longer view. What are the potential damages and impacts that are permanent? Again, if your whole facility or particular equipment is gone, how long will it take you to get back up? What cash does it require for you to get back up? And what is the plan to reestablish those systems so that you are in a new permanent model? We talked about the implementation of the communications plan. Again, it's really similar to what the business continuity plan requires, building confidence in the team, timely, systematic program to move things forward. And again, I mentioned testing. Again,
I think, Michelle, it's important to point out too, you were talking about, the new normal. I think it's important to communicate to your team during the disaster recovery plan that, hey, things don't look the same, but we're okay. And when that happens, when you're back at 80%, 90%, 100%, the team may feel that, wait, this isn't back to normal, and there may be a lot of uneasiness around that. I think it's important to let your team know that this is the new normal. This is how things are going to look, at least for the time being. But as a company, we're okay. And I think that's an important part of the communication plan.
Yeah, I think that confidence building is really huge. You saw that a lot of the larger tech companies especially said very early on, just plan to be home until the end of the year. Mm-hmm. So people could settle into what their new normal looked like in their home offices. They could plan for that rather than sitting on uncertainty for a much longer period of time. So the more confidence you can instill in the team and in the company's stability, the better. So the benefits of planning. Some of this is obvious, but we're going to reiterate it. So protection of assets. Again, we've talked a little bit about where insurance fits in, but what other tools are available? Retrofitting your building, making sure that you have the systems in place to recover data, for example. So making sure you've got assets that are critical to the business protected. Safety of employees, of course, is a big one, and that's been front and center in this particular situation with the pandemic, but it comes into play for most of these as well. We talked about, active shooter, terrorism, riots, all of that. You want to make sure that the plan is looking at where the employees are, how to make sure that they're safe. And depending on the size of your business, OSHA and Washington State WSHA requirements apply there as well. We talked about confidence building, and it's not just employees. I mean, the insurance companies ask for some of these plans, so they have confidence, but your suppliers, your vendors, you're going to see, I think, more people asking for, okay, what do you have in place to ensure safety, stability, and ongoing operations? And then the improved decision-making. Yes, decision-making within the moment of these incidents, but this process will really help uncover gaps in your business more generally. So as much as it's a very, very time-consuming process, it's a valuable process whether or not you actually have to use it. From an insurance standpoint, Marie, kind of how do you see the business continuity and the disaster recovery plans kind of looping back into insurance, as far as the tools here playing into the insurance?
Well, for the folks that have had to do the business income worksheet for their property and casualty insurance, it's actually one of my favorite things to do, but that's because I come from a finance background. But it is a valuable tool, and there's a lot of questions asked on that worksheet, as well as the extra expense worksheet, that really will help you develop your plan, because it wants you to think about all the different financial impacts of an event on your business, and trying to go through the exercise of understanding what are your financial obligations and what financial obligations would you still need to meet in the case of an event, and what you look at that time loss element that Michelle alluded to. How long can you sustain whatever the event is? And it asks you those questions on that business income worksheet. Is it 6 months? Is it 12 months? Is it 18 months? And typically it's 12-month period of restoration is what the insurance company looks at. If your period of restoration is going to be longer than that, you need to have that conversation with your broker, because that's going to not be typical. Not that it can't be covered, it's just not typical. So when you look at what the benefits of planning are, it's understanding where are your gaps and feeling comfortable with, are you able to fill those gaps? And are you filling those gaps appropriately? You know, a lot of the conversations that we've had with clients recently is, are you underinsuring? Are you overinsuring? So really looking at your specific situation, looking at whatever analytics and data, you know, reports that we have as it relates to earthquake and flood. We have a lot of data that we can look at to help you support whatever those decisions are that you're making about your loss limits. And when we look at, you know, we talked about D&O earlier, when we looked at, you know, directors and officers and what you are going to have to go back to your board and explain about why, you know, the decisions that you made about what insurance to carry. If you're not planning and you're not going through these exercises, you're not going to have the justification that you need in order to say, this is why we went with this limit. You know, putting, you know, finger to the wind and saying, you know, this is how we came up with our limit, or we asked one of our, you know, another business we know what they chose for their limits. That's probably not going to hack it when you're standing in front of the board. So having the confidence to have that discussion with all of your stakeholders about how you came up with your limits, the only way to do that is to actually go through this planning.
Yeah. All right, so our action plan. So perform your risk assessment. And this is something that is, you know, can be done on your own, or can be done with a mix of your advisors. So if you're talking to your insurance broker, they're going to have tools that are available to evaluate this. We provide a business health assessment that kind of works through some of the legal risks and operational risks. If you have, your CPA can take a look at some of your, you know, financial risks. Maybe your IT person should be looking at your cyber risks. So if you take a look at this functionally and get a kind of starting point for evaluating the different departments within your business, you can tackle it over time. So it doesn't feel quite so much like a full-time job for a few weeks, but rather a planned out, you know, tool that you can do over a few months. But it really is important, and it will identify things that are valuable for you to shore up for your business on a day-to-day basis, not only in the case of a disaster. So I highly encourage you to begin that process sooner rather than later. The second piece here is evaluating your insurance coverage. Again, I would almost put that together with the developed business continuity and disaster recovery. I think we tend to say, okay, what insurance do we have and what does it not cover? And then let's figure out how to address the things that it doesn't cover. And Marie's advice, I think, is to take it the opposite direction, is to figure out what your business can do and then find insurance to fill the places that you have gaps. Is that accurate?
Yeah, absolutely. And it's kind of a different approach and a different attitude, you know, towards insurance, is that we really are risk managers. You know, that's my role, is to be an outside risk manager for my clients. And the best way that I can do that for them is to help them evaluate what tools they have internally to mitigate the risk so that they're minimizing their need to purchase insurance and hopefully minimizing their spend.
And then share and practice. Again, this is not something that goes in a binder, in a drawer, and is forgotten. It should be something that is living because your business is changing as well. So it should be reviewed periodically, once a year at least, and make sure that the changes in your business are reflected in the plan. We now have a lot of companies that have remote workforces. So if you've got one employee in Kansas and there's a tornado, you want to have a plan for that person. So be sure that you're updating this for your business as it changes. So that's all the formal information we have for today. I want to wrap this up, but then Marie and I can stay around for about 10 or 15 minutes and answer any questions for folks. Our next focus event is September 17th, and it's going to be on incorporating diversity and inclusion in your business practices. This is a big topic right now, and we're going to cover what DEI, diversity, equity, inclusion means, what it can look like, and we'll talk a bit about how to do that legally versus something that might not be quite in line with the laws, because people are sort of jumping all over this in a bunch of different ways, and it's really good to have information around how to do it well. But our guest speaker will be Ann Dorgan of Gumball Enterprises, who does this for small and large companies, and she'll talk more about what does it mean internally. How do we build this into the culture of our business, not just as a reaction to the numbers of people we have of different minority categories in the business. So we're really excited to offer that, and you can see the link there for our webinars, and that will be in the email that we send out afterwards. Thank you, Marie, for joining us.
Yes,
so happy to
hear
your perspective. And get us thinking about insurance in a different way. And again, we can stay on for the next 10 minutes or so and answer questions if you have any. I will unmute folks, and have a great rest of your day.